You're listening to AI PRISM from Seoul Economic Daily.
Should Korea exposure be increased or reduced given dollar-reinforcing macro signals and AI capital market restructuring? It's Wednesday, June 24. Here's why global investors are paying attention to Korea today.
So let's just jump straight into this macro theme of dollar dominance. I mean, the Japanese yen touching 161.93 per US dollar, triggering an emergency US-Japan finance call is huge. How does that directly pressure emerging market allocations, specifically for Korea?
Well, it fundamentally reshapes the cost of capital. That historic yen slide highlights a massive structural rate differential between the U.S. and Japan.
Right.
And, when Japan's interest rates sit near zero while U.S. rates remain high, it acts like a giant financial vacuum.
Sucking capital back to America.
Exactly. It actively reinforces dollar dominance globally. And a dollar that strong puts immediate crushing stress on unhedged emerging market portfolios because their local currencies lose value fast.
Wait, let me stop you right there. How does U.S. corporate debt play into this? Because SpaceX just issued a minimum of 20 billion US dollars in bonds, which is roughly 31 trillion won. Right.
So how does raising massive debt in the U.S. directly hurt a portfolio manager sitting in Seoul?
It all comes down to liquidity. SpaceX issuing a minimum of 20 billion US dollars in bonds absorbed huge amounts of market liquidity. That issuance pushed the 10-year US Treasury yield up 5 basis points to 4.51% this week.
Wow, 4.51%.
Yeah. And interestingly, SpaceX's stock fell 16.43% during this period.
Right, because foreign allocators see the 10-year yield crossing 4.5% and immediately demand higher risk premiums. Meanwhile, the hashtag KOSPI remains incredibly strong above 9,000 points, driven entirely by AI semiconductor strength.
Yeah, the semiconductor boom is really keeping equities up.
Exactly. But despite that equity strength, the Korean won severely lags against the U.S. dollar below pre-U.S. Iran war levels.
Right, creating a severe currency drag. And to understand that dollar strength, we really have to look at how AI and global energy are restructuring capital markets. Like Zhipu AI reached 143 billion US dollar market cap based on open source API pricing at 1/10 of Western models.
1/10. That is aggressive.
It really is. Concurrently, the U.S. allowing Iran to settle oil in U.S. dollars will generate 8 billion US dollars for Tehran in just 60 days.
Okay, so we have Chinese AI undercutting pricing and massive oil settlements locking in the dollar. Does this week's dollar-reinforcing macro signal argue for adjusting the Korea FX hedge ratio, or should you just be looking at sector rotation?
SpaceX's bond issuance pushing Treasury yields above 4.5% narrows the risk premium spread that previously made Korean exporters attractive to foreign allocators. The dollar-reinforcing nature of both the Iran energy authorization and yen intervention means portfolios with unhedged Korea exposure face a persistent currency drag. Therefore, current macro signals heavily argue for increasing Korea FX hedge ratios rather than relying on equity sector rotation, at least until the U.S.-Japan rate differential closes.
Right, so it is a persistent drag. But before we wrap up, you really need to watch the Bank of Korea's upcoming policy signals.
Absolutely. The won's failure to recover, despite the hashtag KOSPI strength, is a glaring anomaly that will definitely force the central bank into using aggressive intervention language very soon.
That's today's AI PRISM, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Ifara award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.